Let's go ahead and get into the first topic, though, for the day. Bitcoin Satoshi era miners just sold 150 Bitcoin in 2025 amid all-time highs. Now, you would expect Satoshi era miners, meaning miners that were around during the first run of Bitcoin, would be the ones to hold, if anything, because they've been holding the longest. Bitcoin miners have added 4,000 Bitcoin to their reserves since April, despite new Bitcoin price all-time highs. New research from on-chain analytics platform CryptoQuant on Thursday also points to a dramatic slowdown in Satoshi-era miner sales. So Bitcoin miners are holding on to their Bitcoin, apparently. So is what they say here. I don't know, like, maybe I misunderstood this article, but let's go ahead and they always do this kind of like back and forth, right? So let's get going and see. Bitcoin miners are holding, it says, onto their Bitcoin reserves despite being extremely underpaid at current prices. According to CryptoQuant's findings, conditions for miners remain difficult despite Bitcoin USD trading within a few percent of all-time highs. Of course, that's because power is so expensive, and the fact is we were expecting a lot higher prices for Bitcoin at this point. Bitcoin miners are the most underpaid they have been in the last year as daily revenues declined to 2-month lows, it wrote in its latest weekly report. Bitcoin network hash rate has declined 3.5% over the past 10 days. This represents the largest drawdown since July 2024, following the most recent block subsidy halving event, which cut miners' revenue per block by 50%. However, miners selling is still muted in spite of lower revenues. CryptoQuant suggests that miners' overall 48% operating margin is responsible for the HODL trend. Miners holding between 100 and 1,000 Bitcoin have, on aggregate, upped their reserves by 4,000 Bitcoin to 65,000 Bitcoin since April's local Bitcoin price lows. This is the highest since November last year, when selling increased as Bitcoin broke through an all-time high of 73,000. Despite high prices, the oldest miners are breaking tradition this year. Instead of selling into bull market rally, Satoshi era miners are keeping distribution to a minimum, even compared to 2024. Selling from Satoshi era miners remains at low levels. These miners have sold only 150 Bitcoin so far in 2025, compared to almost 10K Bitcoin in 2024. Earlier in June, Cointelegraph reported on classic buy signals from Hashribbon's metric, which tracks periods of miners' capitulation to define local Bitcoin price bottoms. So obviously I misunderstood from the article title here, threw me off for a loop, but it sounds like they're holding Bitcoin now at this point. Now, obviously the newer miners, large mining firms, etc., they can't sell because they'll go at too much of a loss. And what we've seen with strategies from large Bitcoin miners has either been converting into AI with something like Hive, or in the case of Marathon, they began mining kaspa and liquidating their kaspa to hold more Bitcoin. And that is in hopes, obviously, for Bitcoin to have a high euphoric phase this cycle. The question is that even happening? And I think, you know, traditionally, if Bitcoin miners were holding their Bitcoin like this, you would see the price of Bitcoin go higher. But we're not seeing that. And I think a reason for that is that we're over that 90% of Bitcoin mined, and the control of the price has gone into the hands of the holders or into the hands of the general public and not staying in the hands of the miners anymore. And this is going to change Bitcoin mining strategies significantly moving forward. The question is, obviously, you know, at what point does it get to Bitcoin miners not being able to continuously scale and increase and improve the technology? You know, at what point does it start to impact, you know, large Bitcoin mining equipment manufacturers like Bitmain negatively? And I think that's really what we're waiting for. Obviously, we've already had an extremely difficult time as Bitcoin miners or miners in general. GPU miners are getting slaughtered. Some of the CPU miners are doing okay, but, you know, really at scale, that's not something that takes off. part of the reason why CPU miners, I think, are doing good is because of the lack of ability to scale in a meaningful way without significant cost, right? And so the general public, I think you say, will hold TDIP, but I don't think the general public will hold. I think it depends on where the general public bought in, right? And so whenever you're talking about like investments and long-term versus short-term and et cetera and so on, obviously with things like the ETFs, that will be a longer-term hold because of the tax benefits that go along with ETFs not being applied until you're into your retirement ages, right? But the holders we have right now are not necessarily ETF holders, right? The holders we have right now are people that are, maybe last cycle, 2021 cycle, maybe they bought in at 60K and they still went ahead and held till now, or previous cycles before there. It's the gap between the profit, right? And so I think in the future, the ETFs will, provided people buy and so on, that forces a longer time horizon, right? But in the short term, we have to worry about, effectively how many millionaires are you going to make before somebody decides to realize it in fiat? And then that will push the price down. And the fact is that is no longer, we're basically breaking out of, or it appears to be breaking out of, the power law, right? And I think that this is an extremely dangerous time for Bitcoin, extremely risky time for miners as well, because we don't actually know what the future of this holds. And because miners have lost their ability to control price anymore and will continue to lose their ability to hold or to influence price anymore, the intrinsic value of Bitcoin based on the cost to produce or mint a Bitcoin begins to fade until the supply reaches a point where the demand is, right? So right now we have kind of a weird position where supply is outstripping your demand. And because we're outstripping that demand, we're not seeing the miner influence over the price anymore. And there's been obvious issues, like we're having cycle right now, and it should be in a euphoric phase where we're having the highest on-chain activity. Right now, we're at lowest on-chain activity. We're experiencing a time in Bitcoin that is going to basically determine whether Bitcoin will be successful or not in the future. And I think more than whether or not it will be successful as a store of value, the bigger problem is, will it be successful as a currency as originally intended? And if it does not meet that original intent, is it therefore not as valuable as it should be, right? Or as it could have been? And so I don't really know exactly where it goes from here, but what I am seeing just in general is that miners, at the end of the day, because I am focused on mining, what I am noticing and what appears to be the truth, even if I got, the original premise wrong here, is that these miners that are holding aren't influencing that price anymore. If you had miners in a position, say 2021, that were holding this hard and not liquidating, you would see an even stronger rise in the price of Bitcoin. And we're not seeing that correlation of miners holding what they're mining to the price of Bitcoin going up at the end of the day. I hope you enjoyed this clip from the Crypto Mining Show. If you would like to see more from this particular episode, take a look up here. Don't forget to also subscribe to the channel. And if you want to support me directly, you can go to sonofatech.locals.com and become a member. Thanks for watching, and I will see you next Tuesday.